Hey everybody, it's Daniel here from InfoVest. Hope you're all doing well. So let's talk about China. China is in deflation and has been for some time when you look at the CPI, PPI numbers, right? We recently had the inflation numbers come out from China. They came out looking as if, things are getting more deflationary there. And there's a very interesting article that talks about this on Bloomberg.com. I'll link it in the description so you can read up on it. But it basically is titled China Deflation Provides Limited Relief for Global Central Banks. So, kind of a twist here saying that, global central banks are happy with Chinese deflation. We also had recently China come out with their export numbers, their trade numbers. So China's trade numbers basically plunged more than forecasts. Its exports numbers dropped 14% year over year in July. This was the worst number since February of 2020. If you remember, during that time, that's when the lockdown started and things started to go haywire. And obviously in China, it started way before. So obviously the effects of the exports and whatnot started to show up months later, and we're starting to see the same effects now. Now, going back, why does this matter? Why is this information relevant for, let's say, the Western countries out there when you look at US, Canada, when you look at Europe? Is because back then, a couple months back, about half a year back, or even a year back, a lot of people were saying that, hey, when China comes out of its lockdown, it's going to have amazing effects on the economy. We're going to see growth completely skyrocket. China's going to save the economy, etc., etc., and we're just going to see a robust economy all over because the Chinese from China are going to, travel everywhere and everything's going to go well. And when that happened, right, the trade was to go long Chinese stocks, the trade was to go long China. But as things came out and data started to come out, we didn't really see that. And people started to wonder what's going on. Why are we not seeing that explosive growth? And there's a lot of reasons you could argue with this. But looking at the trade data that came out, which is weaker than expected, and continues to decline, looking at the inflation metrics basically tell you that, hey, there is a demand issue. And this demand issue I was talking about a year back when I was saying that, hey, this bullwhip effect, the fact that we had the lockdowns, people went out and they bought a bunch of goods and services, and then the producers, the manufacturers, the companies out there said, okay, we need to order a bunch more because there's a lot of demand. And then after things started to loosen up, the lockdowns, that same demand that was there during 2020 didn't show up again, right? And we saw that with a lot of the earnings for, let's say, e-commerce sites, tech companies, certain retailers, right? We saw them really, really do well just because everything was on lockdown. People got a lot of money, and then they flocked and started buying things all over because nobody could travel, nobody could go out. And then as things start to get better, the supply chain got disrupted, and a lot of these companies who ordered a bunch of goods were expecting that trend to continue, realize that, hey, that same demand, that same trend is not there anymore. So now you have these retailers who ordered a bunch of goods from the manufacturers, from the producers, are saying, okay, we've got inventory that's sitting there and we need to get rid of it. So what do you do next? You start cutting the prices, slashing the prices there. So you start slashing the prices, or you store it somewhere else. But if it's going to cost you to store it, then and you need to get rid of it, then yeah, you will slash the prices. And then what would you do? You would not order that much. You would not go back to the manufacturers, to the producers, and say, hey, we need X amount of items. This time you will order less or not at all. And if you go into many of the retailer stores, you're seeing that trend since COVID completely disrupt how things are, that if you go into, let's say, a Home Depot or a Walmart or something, you still see certain items that are not on the shelves, and certain items, whether it's technology, whether it's whatever item it is. You might have noticed it in Best Buy if you go there, that you have to order it online or pre-order it, order it before going to the store, because if you just walk up in the store, it's not really there. So now there's this trend that, hey, if you need something, order it and we'll get it, instead of us keeping stuff on the shelves. And because of that, now you're seeing the effects from the manufacturers and the producers there, where they're seeing an effect because, hey, you're not getting people buying as much as they were before. The demand is not there. So what are they doing? Well, they're starting to feel the pinch, the pain, right? And they're starting to cut their prices as well, right? Because they need to offload certain items. And China's a very good example of this, because for a decade long, before COVID pandemic, a lot of the West, especially US and in Canada and so on, we would get cheap items, cheap goods from China, and it would be just in time. There would be no disruption, and that flow would go on for some time and some time and some time, for a very long time, until now that's been disrupted, because not only you had this COVID issue, but along with the COVID issue, you have tensions, trade tensions between the West and the East. Europe, US, Canada, right? But specifically US and Europe are looking at China and saying, hey, the trade surplus, the trade balance that we've been having between our two nations, even though you sell cheap items and cheap goods, we're taking a second look at this and thinking, hey, we may not want certain goods and items from you because the trade balance haven't been fair for a very long time. So now you're having trade tensions, trade issues that China's feeling. And with that, that's also creating a problem in these Western countries, because if you're not importing these cheaper items, then guess what? It's going to be expensive. There's going to be a low supply of those items, and it's going to be expensive if you're going to try to make it in your own country, or if you're trying to find it elsewhere to fill that gap. It's going to take some time. So now you've got, an issue there in your own country, and you're causing the prices to move up there, while China's saying that, hey, we've got these items we can deliver to you and we're willing to cut the prices. Now, where do those goods go to, right? If let's say Europe or the US are not accepting or blocking certain goods, it would possibly go to maybe to other countries, right, that would do business with them, or maybe not, right? So this is another caveat to the whole CPI and to the inflation, is that yes, China's feeling the pain and the pinch from the weak demand that the world's been facing, that China's been facing, that US and Europe and so on have been facing. But not only they're facing the weak demand, but on top of that, you have the trade tensions that is just causing it a worse off scenario for the manufacturers in China, which is why they continue to slash the prices, and why you are seeing that, hey, these prices continue to move lower, because they need to get it off their shelves, right? And it explains it well in this article, in this Bloomberg article. Now, what's also very interesting is as you go down to the bottom of this article, it says China enters deflation, and they have entered, this is the only fourth time this century that China has reported deflation by that measure. And the last periods it reported this kind of deflation was back in 2009, 2015, and 2020. And also, there in that photo, there is 1998, which happens to be before the dot-com bubble and burst. So you could see there 2009, 2020, 1998, closer to 2000. These happened to be in areas where we later saw a recession. So it'll be interesting to see how this plays out as China continues to report the deflation in their country. And it'll be very interesting to see if that spills over into other countries like US, like Europe, like Canada. Could we see not just disinflation, but deflation as the demand really starts to crunch up, right? Because now people are feeling the pinch with the mortgage costs that are massively high up there. Rent, shelter, food cost, right? And now, if you put in, let's say, a new caveat of oil, which has been on a decline, but just recently start to pick up, if those numbers start to pick up further and further, if oil starts to break 84, 90, $100 a barrel, and the CPI numbers tick back up, does that mean that the central banks around the world go back and fight it with higher rates? Like this article said, right, that the global central banks are feeling relief that China's having deflation. But that may not be, a permanent relief. It may be a small little temporary relief, because if oil picks back up, then hey, you got another problem, and then the CPI number heads back up, and it creates more and more pain, especially if they continue to raise rates. And then if that happens, and you get the job losses that U.S. in terms of the U.S. data is still expecting to see, if you get the massive unemployment rate, the unemployment rate to skyrocket, and you do get that hard landing, that recession, then yes, you could possibly anticipate and guess that, yeah, inflation would come down, and it would not just be disinflation, but maybe even deflation, right? But then it goes back to that question of the trade war between US, Europe, China, the West versus East. Even if there is a recession, a hard landing, inflation is able to come down because of that, will there still be problems because of this trade war, because of certain items that are not being allowed or coming in or being stopped by the Western countries because they've got an issue, they've got tensions with China? And if that is the case, and that is what's keeping inflation higher, do we not go to the 2% target, and do we maybe touch it? Do we go back up? Do we go back in up higher inflation and live in an environment for many, many years of high inflation until we find another proper trading partner? And who is that next trading partner? Is it India? Is it Pakistan? Is it Taiwan? Is it many of these countries combined that we completely forgo and move away from China and to these other countries? Very tough questions to answer, but it'll be very interesting to see how this plays out. If I were to guess, I would think that, hey, as history has suggested, that not only when we see a recession, a hard landing, we just don't get disinflation, we get deflation, and the numbers really, really drop. Demand really, really drops to a point. The job losses increase, the unemployment rate increases, which then the central banks eventually get to their 2% target. But again, right, you get to your 2% target, what do? You print money, you cut rates, and then from there, does inflation pick up because you still got these supply chain issues, these still got trade tensions with China, because that's not fixed yet, right? I don't think monetary policy can fix the government from the trade issues that they're having with China, right? Maybe it can, maybe it won't, but to me, it doesn't seem like that will be a theme going forward, especially from a government point of view, right? It's not that the central banks are telling and deciding what trade should be and what their countries should do with the trade balance that they're seeing between their country and China, right? It's the government itself. So the monetary policy, the central banks What they will do is just control the monetary policy side of things, which is the rate hikes, the printing of money, the QE, QT, and so on. But then again, that doesn't solve the trade issues, the trade tensions, which can still cause this inflation, or certain areas of the inflation metrics or the products or goods still to be elevated, which means that, hey, we could see another pick back up or tick higher in inflation until this problem is solved. So let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.